Good morning, folks.
Good
How are you?
morning. Good morning,
Good
Michael. How
morning.
are you, sir?
I'm doing well. I'm blessed. How are you, Kit? You holding up good?
I'm doing great. Thank you for asking. And I just want to make it very, very clear. A lot of things, this was a long time coming. And believe it or not, with everything that has passed, there's so much levity and clarity. And I feel her with me. And when I come to the market, she really, really, really helps me bring my higher self to the charts. In one way, I want to just mention quickly and put this kind of to bed because I don't want to make it about me. But it's an important thing. And that's a superpower in this market is when you know what you're doing and you can dampen your ego. And our ego is commonly, the number one thing that inhibits us, excuse me. And I, for one, and when you mourn and when you deal with sadness, sadness is a way of dampening your ego. And if there's ways in which you can channel into your own intuition, into your own higher self, your own spiritual power, and when you deal with the loss of someone like your mother or your father or a family member, then it becomes far more real. And a lot of folks don't understand it, but it's real. And I'll just say, as a trader, it's a beautiful thing because the charts really have to watch out for what I am going to be on these charts this year, which is a complete menace because I'm so in tune with who and what I am. And I know that I have her with me. So Michael, I just wanted to say on that note, I'm doing fantastic, brother.
Awesome. Praise God.
Fantastic. Yes.
So I was able to join you. I wasn't able to hear much of anything that was said so far. So if there was a question, I apologize. I didn't hear it. If you just got started and you're just going about normal things,
Yeah,
I'm here now. This one I
that's
heard. Praise
beautiful.
God.
That's beautiful. Definitely are going to have more questions, and folks definitely have pencils sharpened. I hope you've gone over a plethora of material. We haven't had a trader roundup since your introduction of the 1 hour, first hour of the New York market range, and then all of the tape reading and the plethora of information from yesterday, and just all of the content that we have to go over. So. Folks, I hope you brought your pencils. I hope you're here with some valuable questions. Pit Munch, I'm coming back to you. Did you have a question? You're a good person to kind of lead the conversation off academically.
No, I didn't have a question. I just had I think one or two more things that I
Pretty
uh
pleased, pretty pleased.
written
We like
down.
it. We appreciate it. We do.
So, where were we? We were narrative, right? Yeah, yeah, narrative. We were. So yeah, about narrative, he said he emphasized on using the economic calendar, geopolitical, and the retail fear and greed. Yeah, as a narrative. And like you said, it's important in this kind of market conditions to use a narrative. Um, he then also said, yeah, he went into how they took the buy side and did not push for the sell side, and how both sides were taken out, and then you have to wait for the real move in this kind of conditions. The lowest sell side was left in place. And he said, "Oh yeah," he said, "Yeah, it's a little perplexing." But then what you just said happened. Then he said, "I wanted to go here, and it went there. I wanted to go there, and it went there." So yeah, that was kind of funny. After he said it's perplexing what it's doing, and then it did exactly, um, yeah, what it almost
Yeah,
told it
the
to.
tape reading was uncannily accurate,
Yeah,
and the timing was just it's beautiful. It's really, really nice.
yeah. And then the last thing, no, almost the last thing. Um, I'm sorry. I wrote down the "that's what she said" joke. I write those things down.
That was hilarious, by the way. That totally was.
Yeah, I put that stuff in my notes. It's so funny. But okay, the last thing is yeah, the bodies on the 1 minute stayed below the opening range gap, and the wick below the octant of 6 to 5 and the midpoint. But the thing that I wrote down was that the wick to the left was the one that was holding all of that, and that was the 940 candle, and that was holding the whole thing with the bodies stopping at the opening range gap low from yesterday. So I thought that was also like a thing to write down. Yeah. So I guess that was it. The other things I already mentioned them.
I like it. Good ad. Good ad. I think we're looking for questions with Michael here. Excellent notes.
Yes.
And I like the energy. We're bringing the academic vibe. So if you're coming up, you've been awarded a speaker tag. If you have a question on today's lecture and you have a speaker tag, Johan AM, did you have a question?
Before we
Good
begin,
morning,
if I could, please.
Yes, sir. Yes, sir.
Just for time management purposes, 11:45, I have to escape. So up until that moment, have at it.
Yes, sir. Beautiful.
Yeah, I have observations about today's lecture, what I found fascinating, what I did on my own side, on my own charts as it was going on. No tape, no trading, just pure tape reading, marking on my own levels, my own PD arrays. Some things that I had that I didn't really see ICT reflect on was the octants of the 930 premium wick, which I had marked. I know you mentioned the equilibrium, the 50% of that wick. However, I actually had the octants marked, and the 0.875 respect at 938 was beautiful, just for the way down. But that was pretty much it. I don't have any questions, so I don't want to take away any time from anybody that does.
Okay, I think that's a good ad. Good ad. Johan, I think you got some questions, right, buddy?
Yes, I recorded myself reading it out loud. Can I just play it and you say if the quality is okay?
Sure, buddy. Sure.
Okay. Hello, I'm Johan, 16 years old. Okay, is that fine?
Yeah, we're doing great, buddy. Go ahead.
Okay, so that's my protocol. I start with this. I live in North Germany, close to the Baltic Sea. I've been trading for 1 year now, and my model is it must be obvious, one-sided, and inside the key time and price must agree. My entry protocol is, and I think every model has this, first there must be a confirmation or validation of my trade idea, then an entry directly or indirectly backed by a key level. With indirectly, I mean what is shown with the proposition block. If the first OB lays on a key level, the second one is automatically backed without having a key level. Confirmation or validation could be in high probability market structure shift. As example, it did the damage in the upper half of the CB, rolled slightly over outside it, doesn't make a lower low, then takes the high inside the upper half of the CB, which did the damage. And if it were bearish, it has no reason to go up there. And also what you said with the gradient level. And maybe Mohawks in general are good market structure shift candidates, or and high probability SMT nesting agreeing PD arrays, unwillingness to go somewhere body or wickwise, then velocity or speed and behavior around key levels. So that are the bullet points. I go for them deeper with examples on my model, but that summarizes it pretty well. Okay, this was my protocol. Should I keep going on with my questions?
Michael, did you understand or did you hear what Johan is asking? I mean, he tried to prepare for it, clearly.
No, not that. My questions, that was just the protocol.
Okay, so that's okay. So okay, good. Johan, great job. I appreciate you.
Okay, now my questions. I have a lot of questions.
Okay, you got to do one at a time, Johan, okay?
Yes.
Okay, thank you.
Where I thought you don't need to say a lot, but if you want, you obviously can. So does it play a role with role as well, which settings shows smaller overlapping bodies for picking the settlement on or off. You mentioned overlapping bodies in 2024 at a discount for value gap busy inside a news one when you ranted about someone that said you don't have 81 PD arrays, and you said this one would be one you supposedly don't have, and that would be for your stop loss. Okay, was that clear?
I don't know what your question was, Johan. If I had to
Okay,
repeat
so
what the question was, I don't know what it is. Something about a PD array that's a stop loss.
no, so for choosing the settlement setting on or off, we look for volume imbalances in proximity, but there's also like inverse volume imbalances where it's overlapping the bodies. And I asked if that's also something that would indicate not to use that setting.
You're asking whether to use the B adjust setting.
No, the settlement, SET.
The settlement.
Yeah.
You're asking whether to use it? Is that right? Wait, where did Michael go?
No, if you would use it, okay, now let's say you look if you use it on or off, and on one setting you see a lot of
Wait.
overlapping bodies.
I don't wait. You're asking whether are you using B adjust? I don't understand the question here, buddy.
No, normally you're on the daily chart without B adjust with the continuous contract.
Yes, sir. Yes, sir. Yes, sir. Yeah, no, I get it. I get it. I totally get it. I could tell there was some kind of tech difficulty there. Johan is asking about settlement. Johan, can you ask your question again succinctly to Michael, pretty please?
Yes. Okay, you're looking at the daily continuous contract. It's not chart relative, so you don't need to pull it off. But you're looking at the daily chart and want to decide if you use the settlement setting on or off. And we look for volume imbalances in close proximity to decide what setting we use. But there's also overlapping bodies where there's like, overlapping. And maybe my question was if that was an indicator of not using that setting.
I only toggle it until I see the volume imbalances. That's the only thing I'm looking for. So the setting that shows the most recent price action, go back in the last few candles or whatnot. I could care less about the contract that expired because I look at it this way. People are going to look at that chart and look how many times the question comes up. Should I toggle it on? Should I toggle it off? Should I toggle it on? Toggle it off? I'm looking for those inefficiencies with a volume imbalance because they're going to go back to them again. It's a PD array. So if there's so much concern, even in our own community, about whether they should use it on or off, it's simply because I'm telling you, I'm looking, I toggle it. I show you in most recent lectures, I'll say, look right here, okay? Keep your eye focused right there, and I'll toggle it on and off, and you'll see there'll be a volume imbalance. It'll form right there. That's what my eye jumps to. So what I'm doing is I'm toggling on and off. One setting on or off is not better than the other. What I'm looking for is the one setting that has the volume imbalances showing in most recent price action. That's what I'm going to have on my chart. That's what I'm going to utilize. That's the levels that I'm going to really focus on because I think that those volume imbalances are probably going to hurt those individuals that don't see them. Unless they learn from me, they're not even aware of it. So I look at that as a more deciding factor of which setting I'm going to have. It's pretty simple. Try not to make more than that because that's all it is.
So you don't care at all if there's overlapping bodies in your setting?
No, it's the fact that I'm looking for those volume imbalances to occur. If that happens, I want that setting on my chart.
Okay, thank you.
You're very welcome.
What a great question, Johan. Great question, buddy. I really, really like that. I know you had another question, so I'd like to, I'm sure you got plenty, but we got a lot of people here. But that was a great question. Did you have one more, Johan?
Yes.
Without playing the recording, can you just kind of?
Yeah.
I
Yeah. Okay.
appreciate you being that prepared too. I appreciate it. But jump
Okay.
in.
When you're saying, should I?
Yes, please.
Okay. When you're saying the fair value gap immediate before the stop hunt, I would assume the fair value gap range can poke above the buy side, but could candle number 2 or 3 do that, or just with a wick?
It's just the fact that that gap was there before the high or low is taken. Don't be concerned about whether it breaches. If that gap is there, because you don't know how far it's going to go higher above that buy side liquidity or below that sell side liquidity. So don't be so overly concerned about whether it's candlestick number 2 or candlestick number 3 or candlestick number 1 pierces above it. It's the fact that that gap is there before the high's cleared. Then simply use it as a potential inversion fair value gap.
Okay, and this is okay, I think, no, let's say candle number 3 of the fair value gap is still forming, and it pokes above the buy side. And at that moment, while candle number 3 is still forming, but it already swept the buy side, there is a fair value gap range. But maybe later in the candle 3 formation, candle 3 lays below that wick, and at the end of the day, there's no fair value gap anymore. But there was while candle 3 was forming.
Well, you're not going to look at that because the candle number 3 has to close. That then you have the actual fair value gap. Candle 3 has to close for you to have the fair value gap there. And if it does, and it trades above the buy side or the old high or below an old low, then that fair value gap will be used, in my eyes, as a potential inversion.
Okay, thank you. I
You're
can
very welcome.
just wait or leave if you want, and maybe later or next time I will my other questions.
I mean, if you got another question, buddy, you're asking good questions, I think. I think they're good questions. I don't mind. I understand there's other folks too, and that's fair. I see other folks have your hands up. I get it. So yeah, sit tight, Johan. Great questions. We'll be more inclusive a little bit here. I'm loving it. AM, you got your hand up. You've been in before. You asked some good questions. Pretty pleased you got something. And Wang Guru as well. Rangaru, you're coming in. We have Babar here as well.
Yeah, actually, Johan kind of just sparked the question in my head as he was talking. It's not related necessarily, but just came up. Back in 2022, 2023, and all the previous mentorships, you used to highlight and talk about PD arrays that were below a daily time frame but above a 1 minute time frame, annotating them to see how they're utilized. For example, a 15-minute BISI or a 4-hour order block. Now in these recent mentorship videos or lectureship videos, you don't really do that anymore, and you just keep it with the daily gradient levels that you've already taught us, as well as the 1 minute PD arrays. Me personally, I've also put less significance on them, and I still go through all my time frames and see what's going on. As far as actually marking and annotating the levels, I stick myself with the daily levels, the gradient levels, octane levels, and just the 1 minute PD arrays on them. But I'm just kind of wondering, is this what you normally do, or do you still put significance on those other time frames?
Every morning I go through a top-down analysis. I'll go from monthly, weekly, daily, go through, make sure that I maybe wrote down a number wrong. I'm aging now, so I'll be 54 this year. So I've caught myself writing down things incorrectly in my notepad. So I've adopted the whole process of monthly, weekly, daily. I don't always look at the 4 hour. Sometimes I'm looking at an 8 hour. Sometimes I'm looking at a 6 hour chart. And then I'll drop down to a 1 hour chart, 15-minute chart. I'm looking for things that are going to potentially be a barrier for price runs that I'm already expecting. But can you imagine if I spent time going through all of those time frames every single time I do a live stream? I would never get to meat of what's going to happen right now and read it with you live. It would be too much. So I kind of leave that to all of you as your students. The things that are most obvious in those time frames, the things that are obvious that jump off the chart and say, hey, look at me, I'm an inefficiency, or look at this one single candlestick that's supporting price action. They're going to be huge rocks in the road for a price run that would challenge that. But that is not important at this point because I'm trying to progress in the natural order of how I teach things. I don't want to dwell on old things that other people can get to that point when they first start and they go through that process. And then you determine what time frames that you like and which ones are your go-to. And also I've always encouraged the idea of not using the standards that the industry likes to use, which is just the 4 hour, the hourly, the 15-minute time frame. Then mostly nobody trades below the 15-minute time frame, classically in retail trading. So the importance of just knowing right now, get a read for what is it going to do right here. And because of the volatility, the markets have entered this measure of volatility that's unprecedented. We don't really require, to be frank with you, we don't have to be looking at anything higher than 15-minute time frame. You have an entire universe of price action just looking inside of a 15-minute span of time. There's 4 of them every hour. So you have a whole new cosmos of price action to delve into and explore. And you don't need anything beyond that. And anyone that says otherwise is simply, their view's too myopic. They're stuck in archaic viewpoints. They have to have this. They have to have more data. I don't need more data. And as you progress and you learn what I've shown last year and what I'm doing this year, your sample set of data need not be extreme. Small little sample set of data. And if you consider what we're doing, we're watching just the first 30 minutes of trading and look how many opportunities present themselves in just that. There's 2 of those 15-minute intervals. The first 30 minutes, that's the opening range. And we're utilizing very simplistic things, previous day's opening range gap, today's opening range gap. And we're just looking for simple buy side and sell side. So I'm trying to teach real time over real price action live the importance of streamlining everything and not trying to feel like you have to, because my videos, that number of videos that's on my channel and the lectures and all the things, it's like, wow, like where do I begin with all that? Because I don't want to miss the opportunity of being able to learn it and catch up to everybody else. And that idea, that illusion of trying to catch up to everyone else when you first start, it kind of creates this conundrum where you feel like why bother, and I already missed the boat, and you beat yourself up. So I try to keep that in mind when I'm teaching and when I'm doing analysis. I don't ring everything in, but you as the analyst in your own hands, you should be doing those things anyway. But if I did them, it's just going to consume a whole lot of time, and it's just going to bring it down to a pace that I'm not really comfortable with. I want to get right to the matter. I want to get right to the point. Like, this is what it's going to do next. I want to be there. And the natural progression of going through my channel, everyone, if they're doing it correctly, they'll start and they'll do all those higher time frame P-day arrays, and they'll highlight things and they'll annotate. Every single day, whether you've used them or not, you should be going through your charts in journaling. And that's this weekend, Saturday lecture. I will show you how each day should be done with the perspective of a new student. It is not going to be verbose. It's not going to have a whole lot of annotations. It's not going to have everything in there. But as a beginning, this is what you should at least try to strive for each day in logging. And experience will dictate what you start taking out of the charts and using to build your model or build around the ideas of what you look for price runs, barriers to price runs, the inceptions of moves. All those things will kind of like culminate to a point where it makes sense to you and it doesn't have to make sense to everybody else.
Yeah, that was beautiful. Thank you.
You're welcome. Good question.
Yeah, I mean, personally, like for today, for example, I skipped my daily 4 hour, and I've been doing that for a while now. And I just went 15 minutes, took a quick look, 5 minutes, took a quick look, but then I stuck primarily with the 1 minute. And just, okay, if it's okay, another quick follow through.
Sure. That best practice of yours is in question, though, by the way. So what you just said, that's a red flag. That does not sound like best practice at all.
The 15 minute and 5
What
minute.
you just got done saying is like, what? What did he just say?
Oh, no, not a follow through on that.
Well, I want to follow through on that. That was not what you like. You don't want to just come to the chart, have no high time frame narrative or bias whatsoever, and instantly delve into the 1 minute, like you just said.
Yeah. So I'll jump into that. When I came in this morning and I took a look at the 15-minute, I just noted kind of like the high from Monday 10 a.m., how we respected that premium wick and dropped below, and how we engineered relative equal lows from Sunday's candle and from this morning 8 a.m. candle on the 15-minute time frame. I dropped onto the 5-minute. I noted the small market maker sell model, but that was primarily all I noted. Jumping down to the 1 minute, then I really just focused on the market maker sell model from the 5-minute, breaking that down, and then also the 7 a.m. range or 7 a.m. time and onward, the pre-market session. What occurred there? What should I be looking for? Who kind of got rated or liquidated?
I love that. Love that. That's very applicable of, I mean, you're applying, I would say, 23, 24, 25, and now 26. And AM, thank you very much. I want to reiterate a few things Michael said quickly to the audience. And that was essentially, he is coming to us and he is anticipating that you have already consumed core content. I have a lot of people in my DMs constantly asking me things. Month 8. Whatever your question is, if you haven't watched month 8, that's your answer. Month 8. Well, okay. What about month 8? Well, I was thinking about month 8. Oh, you haven't watched it yet? Clearly. Because it will succinct and boil down into what you need to understand. And when Michael talks about month 12, and you doing top-down analysis, something today he said in Trader Roundup, and I want you to value and appreciate. We aren't just looking at a 3 or a 4 hour. He mentioned a 6 hour and an 8 hour. And you coming to terms with the chart, with PD arrays, with what you're looking for in regards to the liquidity paradigm and inefficiencies, you can get in sync with a 8 hour, a 6 hour range. And then you're looking for nothing more than a 15-minute expansion. So those two things Michael pointed out, and where and how the mentorship is really honed into high frequency. You're looking at, I'm staring at as well, 5-second, 15-second charts. And you will see a world open up to you that otherwise wouldn't be. That doesn't mean that you need to come in to overtrade and over leverage and be a degen. It means that you need to come in, identify the market condition, do what this mentorship is showing you is how to trade 930. What eludes everybody in the market is how do you arrive to market open? How do you arrive to market open, and how do you do it? Michael just outlined again for you, the listener. I'm just reiterating the first 15 minutes. 15 minutes. That's all you need. You need to get in. You need to find your expansion. You need to take your trade, and you need to get out. And you need to go about your day because you got other things to do beyond trading, beyond all of this. Trading is just a piece of. In this mentorship, you're learning very, very, very skillfully, succinctly, like a surgeon, how to approach the 930 bell. So let's keep that in mind, right? Michael's already said it, and I just want to reiterate some of those things. That's why we're here. It's what we do. So, Wangaru Jr., are you there, my friend? Wangaru.
Yeah, I'm here.
All right, buddy. You got a question for us?
Can you hear me?
Keep talking. Make sure your microphone is clear of any, blockage. It's iffy. Pretty please continue.
Hey everyone, following the protocol.
I love you, buddy. Your microphone's a little blurry. It's just blurry, fuzzy. Continue. If I have to stop you one more time, it's just because of tech difficulties, but pretty please continue.
Can you hear me?
Yeah.
I can't hear
Yeah.
him, kids.
Yeah,
So I'm
no.
gonna have to go
The
out.
answer is no, buddy. I'm sorry. Thank you, Michael. I'm trying to be nice. I'm trying to see if we can hear you, but no, Wanguru, I'm sorry, we can't hear you, buddy.
Can you give me a minute?
Yes,
Because
sir.
I'm looking
Absolutely,
something.
we'll come back to you, my friend. Try and arrange yourself technologically. We understand, and come back. Put your hand up when you think you're ready, okay, my friend?
Okay.
Alrighty, thank you. So we heard from AM Johan. We got Wanguru checking his stuff out. Babar, Latif. Babar, you are next, my friend. Smile.
Yeah, hi, Kid. Can you hear me now?
Yes, sir.
Thank you very much, Kid, to accepting my request for the protocol. I'm Babalati from Oman, 45 years old, doing trading from last 4 years and following ICT from last 3 years. I have watched all 2024, 25, now 26 mentorship and the old as well. First of all, I'll thanks to ICT that he has given lot of I should say everything absolutely free on YouTube, which help to the new traders like me to get everything correct algorithmically, which is working absolutely right to the tick. Okay, I had two questions today. Question number one, for the 2 days live stream, when Michael is on and he just said today just tape read because no pre-context, no any other marking. So what is the reason behind? I want to know that. Why we just wait for price action opening and then we know that where is a draw on liquidity, where it will go and where it will go next. So, and then second question is from personal trading, actually following the model 2022 with the confluence of first presentation and opening range gap with three of these things, and then I just trade on these things with model 2022. So sometimes what happened, I missed the trades, and then when I overview at the day end, every single candle and moves is to the tick, precise, but I failed to catch up at the beginning. But later on, honestly, I found every single reason why it stopped here, where it goes, where is the fair value gap happen, which one is going to be inversion level. All comes to be clear, but after that. But while it's running, as most of the times I miss the trade. So how I can overcome this problem? This is my second question.
Oh, well,
Yes, please.
so your first question, one more time.
Yeah, first question is that 2 days live stream. When Michael did the live stream, he said we're just tape reading. Okay.
Yes.
So what is the reason behind
What
why
is the reason there's war,
Yes.
the conditions, the extreme volatility
Yes.
of everything that's happening around the world? There is fear for funds to be investing money into the global markets due to uncertainty. You understand that?
Yeah, that is I understand, but
Okay, but
because
that's the answer
right
to your
after
question. That's the answer to your
right
question.
after 9:30 first candle.
No, but that's okay. But Bart, you're asking a question,
Yeah.
and I'm giving you an answer.
Yeah, thank you.
So funds are scared to enter. Your second question was?
Is about I couldn't get the trades on time. Okay.
You're inexperienced. You're inexperienced, right?
Yeah.
Okay, so why are you not able to get the trades? Is because you don't have enough experience. Is that fair to say?
Yeah, you can say that's 3 years I'm following ICT. I have
okay, and that's not enough time. That's not enough time still, right?
But after that, when
If I may,
pretty please, Michael.
Yeah. Yes, please, Michael.
I have a lot of students that have put years into dabbling with what I taught. And what I mean by dabbling is they'll watch a video. They probably won't finish the video. They'll probably be doing something else while they're watching the video. They're generally not taking notes. They're generally not taking any action on the things I tell you to practice and do. Look for these types of things. So the reason why I'm doing tape reading live over live price action is to show everyone that's not done it yet or what they're expected to look for. What do you do? Like, what is it you're supposed to be doing? As I said today, and as I said yesterday in the live stream, if you're not spending time, working towards knowing what to anticipate. So your second question is answered simply because you haven't been doing enough of what I'm showcasing yesterday and today. That means simply avoiding trying to put a trade on. I hear you. I hear you. What you're saying. You're saying you're missing trades, and that's normal because you don't know what you're doing. By not knowing what you're doing, by not putting yourself in a situation where you're sitting on your hands, doing nothing except for observing price action and collecting the experience of seeing, okay, this is what ICT taught, or this is what my present understanding of what I've learned thus far going through the material. This is what I would expect to see happen. I'm not holding myself to a expectation that's going to realize a profit or avoid a losing trade. I'm just observing price action. You're getting that experience, so that way, because you see it over time, many times over and over and over again, they tend to repeat. These things tend to repeat. And in the beginning, nobody really has. They don't believe just because I say it. They say I believe because ICC said it, but they don't really believe it enough to do anything with it in their own hands because they don't have the experience to do it. So by placing yourself in front of the price action, seeing it materialize and pan out over time, and also collecting the data on how many times it fails in your own hands versus how many times it pans out as it was taught, that gives you the confidence to then execute in a demo account. How much time did you do tape reading before you actually started taking trades?
Yeah, actually, honestly, I had given a lot of time. For example, 12 hours, 8 hours. Now, when I had watched out almost all the videos, contents, which I'm sure
Can
like,
I come back to what you just said? You said 12 hours. Is
yeah,
that like is that cumulative hours invested in, or like how long have you been just simply watching price action? Give me like a duration of weeks, months, that type of thing. You say you've been trading or studying it for 3 years. How much time did you invest in just simply not even doing demo, not time to take a trade? How much time did you invest in doing that?
yeah, this is about 1 year, you can say that. I just practiced, investigated, because first 1 year it was rubbish. I was following sport and resistance, all online goobers which I was following.
Ah.
Wrong. When I found you, one of your student is Abdullah Masood from Pakistan. He introduced you to us. It's actually big community, about 55,000 traders, which we do not about you. But when he introduced you, we keep following you. We just got all the knowledge which you have spreading. Then we realized, oh, we was on the wrong side. And now, Alhamdulillah, I should say, we are on track. We are every single move which is algorithmically we can found, we can identify, and we can catch. But sometimes manipulation is not algorithmic, so we can't. So now I can say that from last 2 years, it is to the tick. Precision was excellent, honestly. It's all due to you. But still, yeah, sometimes move couldn't catch. It was a little bit late. But now the content which is in 2026 was excellent. Is way better than all previous, honestly. It's very precise. And now this is, inshallah, we'll overcome all these problems which we are giving day to day. Live stream is excellent.
If I could just suggest to you
Yeah.
and everyone else that's maybe feeling the same thing, what you see me doing in the live streams, that's all you should be doing for at least a month minimum, but I think 2 months is appropriate.
Okay.
Not even trying to take a demo account. Don't try to take a trade. Don't try to trade the information. Don't try to do something with it where you get money, because what you're doing is you're in a time where trading is very, very hard. I've been very open and honest about this. It's not easy for me. Like, it's very, very hard for me to dial back the measure of frequency that I'm used to being able to do because of the volatility and all the shared ranges that these candlesticks create. So by me dialing back, and I'm trying to teach by example, this is what you should be focusing on. This is what you should be doing. What is it you're doing when you're tape reading? What you see me doing? It's very relaxed. It's very casual. It's not high demanding.
Yeah.
And it's allowing you to get experience. And if you haven't done enough of this style of just tape reading for 6 to 8 weeks, don't even try to take a demo trade. And then you got to do about 2 months of demo trading after you've grown comfortable with seeing the things that you learned to look for and anticipate. If you don't do this, you're setting yourself up for failure. You're going to fail. You're going to be stuck in this cycle that I have a lot of students that are like this. They want to have a shortcut. They want to jump around this. They want to get to it. It should be easy for me. I know what a fair value gap is, but I don't see it when it forms because you didn't watch it happen in price action for weeks at a time with no expectation in yourself. You don't place any emphasis on you being right or wrong.
Yeah.
You're just observing. And by having that exposure, that constant repetition of being in front of the chart, watching the candlestick breathe and form, the ebb and flow of what price action does after these things form. Is it drawing to where you think it's going to go? You got to feel what it feels like to feel like it may not get there, but stick with the idea.
Yep.
Or, wow, it really went there quickly. And what you're doing is you're getting experience without monetary consequence or reward. And if you don't do this, what you're doing is you're shoving in all in the beginning of your career, all in the beginning of you learning, you're stuffing all of that available space and bandwidth for learning and getting experience that's not monetized, and you're not punished when you're wrong. You're forcing in monetized results through ignorance. You're doing something and you're trying to do it with a report card or a reward of making money when you don't really understand what you're doing. And you're placing too much emphasis and importance on being profitable before it's reasonable for you to expect to be profitable. And when you do that, it creates so much scar tissue. It's toxic. And it's very hard for me to reach a student that's done that to themselves because they've harmed themselves psychologically, emotionally. They no longer really trust anything I'm saying because they now want to equate their results are now my fault when they didn't do what I'm telling you guys to do in the beginning, which is don't even press a demo. Just sit in there and watch price action. And the ones that are honest and they really want to make a concerted effort to go over that again, they have to scrub themselves of everything they think they know. And that's a very hard thing to do because you gained bad habits and you have these impulses that you want to act on. So spend the next 4 months. I promise you, it will be the best thing you could do for yourself. And then if you want to try to trade then in the fall months, once we get through summer, once you get through this spring, all this stuff that's going on right now is making it very difficult. And if you don't have this as a baseline of experience, tape reading without even pressing the button, what your experience is normal. Even though you feel it's alien, it shouldn't be like this. I want to be successful. I wanted to jump ahead of the line and get around having to do all that. That's not. Would you want a surgeon cutting on you simply because they read a pamphlet about how heart surgery helps people live longer? You wouldn't. You want somebody that's been in there observing other surgeons working on actual people, not cadavers, not dead bodies. You want to see and experience these types of things in a controlled climate. So that way you get the experience without nicking the artery and then killing the person you're doing the operation on. And you're the person in the operation room. You're the surgeon and the person being cut on. You're doing all that to yourself. So to avoid all the excess scar tissue, avoid the transactional experience because that has its place. But you can't jump ahead and ignore all of the sitting still, watching price action, and becoming accustomed to it. And then it desensitizes you to when you're seeing price retrace against you. It's far easier for you to watch price action retrace in a price run that you're expecting to run to a draw on liquidity, whether it goes higher or lower, it doesn't make a difference. But if it starts to retrace and you have nothing on it,
Yeah.
you're watching and thinking to yourself, okay, if I was in a trade, I probably would be squealing right now. I gave up. It would have had $1,000 of unrealized profit, but now it's only showing like 400, and you would be losing your mind over that. But there's nothing in that chart saying to exit the trade, and you don't get that perspective or that visibility or the ability to hold on to a trade until you condition yourself to do these types of things when there's no money involved at all. So 2 months of tape reading, 2 months of demo. If you don't show consistency there, don't try to take a live trade, whether it be in a funded account, a pursuit to get a funded account in a payout position, or with real money. And I sincerely mean that. And if you don't want to listen to that, it's up to you. But you're going to stay in that rut, that cycle of not feeling you can get it because you're not listening to this advice. And I promise you, it's good medicine.
Thank you, Michael. I'll follow the instruction. Thank you so much.
Very good.
Thank you.
You're very welcome.
My boy Babar Latif coming in, Michael, coming in hot from Oman. So another international listener. Love having him on. Great points, Babar. Enjoy having you on. So thank you. Very good points.
Thank you very much, kid.
Yeah, man. High five. Great job. Keeping the conversation going. Got 45 more minutes here. We are in a macro 10:58. I like the time. Joshua, Smart Money Futures Trader. How you doing, buddy?
Hello. Good, sir. How are you? Good morning. So, can you hear me? Is everything working?
I can hear you. We have a protocol, and one of those I would appreciate you following me, sir.
Yes, sir. Yes, sir. Sorry about that. I just follow really ICT.
I understand. No big deal.
Tanya Trades and Tremaine. Those are really the three that
They're great. They're all great follows. So no harm, no foul. Just while you're here, I'll just ask, But
well, anyways,
and then pretty
happy
please
Tuesday.
continue. Yeah, happy
Yes,
Tuesday.
sir.
Thank you for coming on.
So my question to you, Michael, I'm a little nervous, but I'm 22. I've been doing this since I've been 18, so not very long. I have a lot to learn. So in 2 months, I'll have a year of live trading. And so that's not a lot of time. But just my question to you, Michael, is what keeps you patient? I know you talk about trusting in your process, trusting in God, trusting in risk, your risk plan, but what really keeps you patient, when you tilt, stuff like that?
When you say what keeps me patient, what observations are you using to define my patience? Where are you seeing patience?
I guess when I say that, I mean more like, I guess I just want it now, and just your ability to just.
You're asking for me to kind of give you hints on how you can obtain more patience, not so much that you observe me being patient. Okay. I read into your question a little too much. Well, first of all, you're going to either be taught patience without pain, which is rarely done, or patience is going to teach you through pain. You're going to hurt yourself by not waiting for the model to present the setup. You're going to try to forecast the setup before it's there because you're afraid you're going to miss the move. Is that following the model? No. Through pain, doing those things incorrectly will teach you, hopefully, if you stay solvent long enough, or have an income stream that can constantly replenish what you lose, but you're doing it incorrectly by doing that. And that in itself will teach you patience if you are keyed up on learning to do it correctly and learn from your mistakes. A lot of people don't want to learn from their mistakes. They have this self-destructive mechanism deep ingrained in them that somehow a lot of traders go through this. They go through this pain of, they think they're trying. They think that they're doing their best, but they're really not. They're just throwing the dice to see what will happen. It's like playing the lottery. It's like going to a casino and throwing down some money on a table and see what happens. And if it wins, you get an emotional, euphoric feeling like, wow, this is fun. I didn't expect it to be this fun. And now it is. I want to do more of it. And you pursue it, and chase after it. But what happens is we end up getting into this stuff and we don't really pursue a regimen of rule-based ideas and protocols and processes that we have to adhere to. And that takes patience. By definition, as I mentioned in the live stream today, we as humans are not good rule followers. We generally don't do it. And when pain comes into the equation, that many times is the multiplier to draw attention to our problems. And many people, and I was like this in the beginning, I looked for excuses as to why it wasn't my fault. It was somebody else's problem that I had I adopted it. I looked at someone else as being the contributing factor as to why I was failing. And I wasn't looking internally. And I wasn't saying, I'm the one that's responsible for this. The people around me didn't put me in those trades. They didn't tell me to trade that many contracts of soybeans and getting slapped upside the head. They didn't tell me to do this. It was me. But because it's uncomfortable and losing money and doing it incorrectly, you have to take responsibility and say, okay, I'm accountable to myself. I have to be accountable to myself. And if I'm doing things incorrectly, if I'm rushing to get somewhere profitably, rarely is that actually a good thing. It doesn't really pan out. Moving slowly towards profitable actions is the right way. Moving quickly to try to preserve your capital is the right way. But we switch it up in the beginning. We'll hold on to a losing trade forever until we can't hold it anymore and we margin out of it. But a winning trade, you get a little bit of profit and you're thinking, wow, this feels different to me. Like this is, I don't want this to go away. What happens if it turns into a losing trade and you've lost the whole plot? You don't even want to hold on to the trade anymore. So by tape reading and demo trading and working towards that, and then eventually using what you've gained in understanding by doing those things, applying it to live trading, it doesn't feel alien to you when you're experiencing a profitable run. And when you see it turning against you, you've done this many times before. This looks like it's going to turn on me. And it makes it perfectly clear to me that I should not hold this trade anymore. Or at least let me take half of it off or 80% of the trade off. Because I might be wrong in my infancy. And all these things help towards building patience. But patience is not an overnight thing where it's just, I got it now. It's a work in development. And you will constantly work towards that in the first 5 or 6 years of this.
Right. So if you had your 22-year-old self next to you right now, what would you tell him? Like, when it comes to trading and just being a part of this business long term?
I would tell him to go watch If I Could Turn Back Time in when I was 20. That's what I'd tell him.
Yeah,
Hey!
that's the best answer. That's the right to the point answer. But to honor your question, I would say stop trying to make big wins for every trade and focus on the effects of compound interest, because that wasn't what I did in the beginning. I was trying to get big wins individually on individual trades and thought that and
Right.
equated that as to this is success. I'm making $5,000 on that one trade versus, okay, what happens if I just relaxed and didn't scale up so much in leverage and I just did one contract? And sure, I may have only made $650, $700, but the toll that you place on yourself while doing this, the chemical imbalances that you thrust through our own bodies by doing it, it's stress that it builds over time, and you'll wear yourself down, and the quality of life is diminished because of that. So you can make lots of money trading, and there's lots of people out there doing that. But if you got them in a room by themselves, and I could guarantee you, I could get most of these people online that pretend to be very, very profitable. If I had them in a room by myself with them, I could have them crying because I
Yeah.
know what buttons to push and say, what about this? And what about that? What about this? What about that? And they would be honest. They would start crying. They'd be like, yeah, man, you have no idea. Like, my marriage is in shambles. All this stuff's going on. But I make lots of money. I make lots of money. My kids don't know who the hell I am, but I make lots of money. Yeah, we have to take a step back and say, okay, people may be successful. They may be making money. But what is that going to do for you when you start making it? And what is the price that you're going to have to put yourself through to get to that? And by
Right.
deferring these big, heavy-handed windfall victories per trade, I would have told myself, if I can go back in time, I would say, don't try so hard and let the process be a lot more enjoyable. Because I stressed myself out trying to do too much in the beginning, because I felt like that's what I had to do. And over time, you'll see that a little bit of effort compounded over time builds huge wealth, and you don't have to feel all those stresses and those contortions emotionally, psychologically, that everyone of us puts themselves through.
Thank you,
Can
sir. I
can I just
appreciate
add
that.
this quickly?
Yes.
Consistency means doing the same thing every day. Be consistent. Find ways in which you can be consistent in this market. And part of being consistent is what Michael is showing us as well, is not engaging, knowing how to read, knowing how to analyze. I think your point of saying be patient is great, but that is experience. And being someone younger, someone who's thriving for experience, again, less is more. I mean, the superpower is really finding peace in your ability to do it one thing consistently. So when we say consistency means doing the same thing consistently, consistency comes from doing the same thing. And these concepts, the way you're applying them to different market conditions, is going to allow you, everyone here, all you're looking for, and Michael said it best today, you're looking for an expansion of 15 minutes in this market because it will change your life. And if you can find that consistent expansion with the proper edge and the right window and the correct risk management, then you have unlocked a level in this life, unlocked it with a superpower.
So
If I
if you
can,
had to keep
if I can
yourself at
add,
a strict, I'm sorry, if you had to keep yourself at a strict R to R in these market conditions, like would there be a certain amount of like ticks, points?
um, I don't really have a, I don't have a faith in that because I'm a little bit more of a universal trader. I can go in and just,
Right.
I could carve out whatever I want with a one to one. My strike rate's a little bit higher than the average bear, so I can thrive in one to one. But if your experience level is not so up to par with someone that's doing it, you know, more consistently, more profitable for a longer period of time, aim for 3 to 1, and I think that'll serve you well. 5 to 1 is like that's the upper echelon, the top tier of modeling, and it would really filter out a lot of the bad trades for you in this environment. But are you equipped to say, I only had 2 trades this week because this is what my R multiple is? Most people aren't. They feel like they got to be in there trading every single day. And this environment is not conducive for that. For new traders, their experience level is too small. And that's not a knock against them. It's just the reality. Listen, you can get to a point where you can buy and sell all day long in the same instrument and not have a real technical model. Just trade liquidity and inefficiencies. Just volatility trading. That's it. Ping pong, up and down. That's it. But when you first start, you don't know what that. You can't do that. Okay, you can't do it. And people that try to do it, they hurt themselves. And I got copious emails all around the world from different people all the time saying that they've tried this and they can't do it. Can you please help me? I was like, well, you got to start in the beginning. This is the way you do it. And by tape reading, you'll find what what you're supposed to be being consistently with. So, what is it your model is going to capitalize on? What is it you're trying to capitalize as a run in price? Are you looking for liquidity? Are you trading to inefficiencies? Are you trying to do expansions outside of that first 30-minute range for the daily range? And I'll say this: I saw a comment. This is why I posted what I said on Twitter this morning. Kyle, you know him as JCap. He posted a video yesterday that I did not know about until some of the students mentioned him as a response to something I said. And I didn't see his video, but I watched about a half of it this morning. And I see what he said, and I didn't complete it. So I'm going to be very careful about what I say because I didn't completely watch it yet because of the live stream I was doing this morning. I intend after this to grab something to eat and listen to the remaining portion of it. But he titled his video saying that you've been lied to about lower time frames. Now I get it, the gotcha, clickbait type titles and all that stuff. That's the thing you get people to watch it. And I listened to the first portion of it, and what I heard, it took me back to me trying to trade like Larry Williams. See, Larry Williams said, try to hold for the close. The biggest trades, the biggest wins you're going to have is if you get in around the open somewhere. Okay, and on bullish days, he was buying bullish breakouts to the upside. That's what he was doing. He was chasing buy breakouts. Is what he was doing. That's what his models were doing. He would buy a break above 20% of the previous day's range. What is that? That's breakout. There's nothing technical about that. It's just He knows it's likely going to be a big range day. He's not going to be an overthinker. He even admits it many times. He's not very smart or technical when it comes to trading. He just puts heavy-handed bets on and holds for the close. So what did young ICT think? Well, I better hold for the whole day. But my ability to get in at the opportune time wasn't up to snuff yet. So I would be in capturing the intraday high of the first hour's range. I'm buying that, and then I'm getting rigged across the coals the other direction. Why? Because I'm holding to a mentor's perspective. I have a great deal of respect, even still today. I don't trade like he does, but this information that he put out, I had faith in. I put all of my investment funds in this idea of every trade I enter, I've got to hold on to the close. Now I'm driving around Baltimore, vicinity, filling candy machines and such, while I'm stressing, making and losing money, watching this little transistor radio size thing tell me what the price of all these markets are doing, and I'm losing my mind about it. Holding on, I got to hold to the close. I can hear him in my head. Traders that make the most money are holding to the close. That's where you want to make the big money. It's not the getting in and getting out day trading. Well, I have found, and this is kind of like a response to JCap. He said that he lost a lot of money and hurt himself by doing a lot of lower time frame trades. And I guess one would do that if you're just trying to chase every little thing. And everybody does this. Everybody does it. When I transitioned from higher time frame charts down to lower time frame charts, I got slapped around a lot because I was trading without a model, without context. I had no idea what I was doing. But I think I'm illustrating to you all now in no uncertain terms that I know what I'm doing. I know what I'm looking for. I know how to anticipate certain things. That doesn't make me the better trader than Larry Williams. It doesn't make my methodology teaching the way I'm doing right now better or less than what JCap does with his trading. I took away from his video that this is what he found works for him. There's too many decision prompts with lower time frame charts. So to avoid that for himself, he focuses on a higher time frame chart. But when I tried to apply that when I was coming up, that actually hurt me. So I went in, I turned everything upside down without saying to Larry Williams, I'm turning everything upside down that you taught me. I'm going to go into lower time frames. And you said it's just noise, that's not the right way to do it. You want to make a lot of money. And now I can go into an individual day and I can parlay up whatever that hold to that close type thing would do. I can parlay that up in every 15-minute interval. So it doesn't hold true to me, but in the beginning it did. So having this expectation of being consistent, what you're looking for, what your model, what you're comfortable with in your own hands. I have a lot of things that anyone can come in here and say, this is what I'm going to do. The problem is, as a teacher, this is what I struggle with as a teacher, I can't take anybody that comes to me and says, this is what I'm trying to do, this is what I want to trade, this is the market I like, and this is the time I have available to trade. Build me a model. Okay, I can suggest to you certain things and certain time frames to work within and for charting, but then the model itself has to come by your own personality, what you agree with. Many of you are not going to be contrarian. You want to be following the herd, whatever it's been doing. Well, that's a silver bullet. That's easy. But what happens if you're a contrarian and you don't like what's going on in the marketplace? Then you're a turtle soup. You're a false breakout type trader. Rarely are there going to be a trader that can do well in the beginning both ways because it's a divided mindset. So that divided mindset is going to be a barrier to entry for you finding your unique model. So we can say these terms like, we're aiming for consistency and do the tape reading and follow the plan I'm laying down here today, but there's still a great deal of emphasis and responsibility on your part as the student to determine where you're being drawn to. Because there's a lot of PD arrays that I have, you won't ever touch them. You won't even use them. It will never be a factor in your trading, and you can make lots and lots of money without ever doing them things. But the problem is you're going to wrestle with which one you're going to side with in the beginning. Just pick one. It may not be the one you stay with, but because you're following one, the exposure of reading the tape live, or at least recording it, don't do it through market replay. You have to see every individual candlestick from the beginning to its close. Because if you do anything other than that, you're not getting a true depiction of what it feels like watching that form. Your subconscious will retain that. And then what you think is your model or what you're aiming for your model, you'll start seeing other things that jump off the chart to you, and you'll say, I noticed this more. That's what you're aiming for. But if you don't give yourself enough time doing it, 2 months, you won't know what your model should be pursued. You won't know what that is. So by doing these types of things, I'm not trying to make it harder for you or prolong your destination to success. I'm equipping you the best way that I could have corrected myself a whole lot sooner had I known this way of doing it. I was in a hurry to make the money. I needed to make a lot of money. I needed to try to win back an ex-wife. I needed to prove to my friends, I was something I wasn't. Bottom line is, you have to have a process. You have to have something you're going to submit to that doesn't immediately yield to you profit or clout online. You need to keep it private. Don't tell everybody what you're doing because everybody's going to give you advice why that doesn't work. And they're probably going to work today. So the bottom line is simply slow down. Slow is fast and fast is smooth. And you want the learning curve to be just like that.
Thank you, Michael. I appreciate it. Thank you.
You're very welcome.
Just speaking on our boy Kyle Jade Cap, I mean, he's core content month 8, and he loves trading hourly FEGs and IFEGs. I mean, he keeps it super simple. I mean, I don't know what the clickbait was or anything else, but as a friend, as someone that knows exactly how Kyle trades, he trades month 8. He trades an intraday protraction, and he loves taking trades. He doesn't really even leave the hourly. He just takes trades off the hourly. And that goes from back to his FX days where he was just trading off of the hourly. But it's a month 8 intraday protraction, Michael, is what Jade Cap is trading very, very commonly. And I would presume at the end of whatever he's talking about, yes, the high frequency where some folks might get tripped up, his land towards, freedom is going to come from zoning out of the low time frame into the high time frame and looking more from these high time frame distributions, right? Because that's his model,
The lower the time frame, the more requirement for you to make decisions and move and adjust. Okay. If you are not a fast thinker, if you're not equipped to turn on a dime, identify a change and a shift in the characteristics of the market activity right now, lower time frames are going to feel fast. They're going to feel like they're moving fast, too fast, and they're not moving any faster. They're not going to move any faster. And one of the greatest exercises you should do is have a daily chart, an hourly chart, a 15-minute time frame, a 5-minute, and a 1-minute, and watch them build individual candlesticks and how they move back and forth. And you'll see they're not moving any faster. What you're doing is you're being tricked by the perception that you must make a decision. Okay, that was the only thing I disagreed with what I saw of this presentation. And I'm not trying to knock him or slap him down. I'm just saying that there's this movement in the industry right now where everybody's trying to now calibrate everybody's expectations about you've been lied to about smart money concepts. You've been lied to about this time frame being the best. You've been lied to about this market being the best trading opportunity. You've been lied to about, what institutional order flow really is. Everything's you've been lied to. And then when you watch these things, it's like I didn't feel anything was really earth-shattering or it didn't change my mind about anything. In fact, what it does is it shows me that what I'm teaching is still top tier and everything else can't come close to it. But I think what happens is content creators, they have to come up with these things to not only keep their community captivated and also kind of like serve their level of investment participation, investing in themselves. So if you're going to have a community that's going to be rather lazy, okay, or just they want to just watch your content and be enjoying and whatever, that's not the same as someone like here where I demand that the students not be lazy. And I will tell students right to their face, that's a lazy perspective, knowing that may ruffle their feathers. They may be offended. They may go away. But I know enough and I trust enough if they're going to be honest with themselves, whether now or later, they're going to realize it later on. And they come back. And I've had lots of students come back and say, you know what, you were right about that. And I'm thankful. I needed that. I went away from it. I came back and now they're stronger and they're making money and they don't work. They don't work. They're not on social media. They got more than 7 figures in their bank account after taxes. Okay. So these things work. This mindset works. But as soon as you get these gotcha type titles, to me, you're really raising the bar to expectations that many times don't really deliver. And simply just saying, you know what, I tried doing it this way, and what I learned was I was actually better doing it with this time frame because you can make lots of money trading an hourly chart. You can make lots of money doing a 4-hour chart. Trading on a daily only, you're going to get very less, far and few between setups. You got to hold on to trades for a lot longer. Your stops have to be extremely wide. Your leverage is extremely low. But over time, you can still become a millionaire in 10 years doing that. It's all how you manage the money and how you manage yourself. The time frame is not the importance. That's not the secret, okay? I promise you that. There's no time frame that's going to yield the kingdom of riches because you now trade a higher time frame or a lower time frame. You can blow your accounts on a higher time frame chart just as easily you can do it on a lower time frame. But what you're doing is in a lower time frame is you're taking the volatility and the velocity of opportunity and speed to next setup, not speed and price. There's a lot of setups in these lower time frames that help you practice, even if you're going to be an hourly chart trader, a 4-hour chart trader, or a daily chart trader. The lower time frame is a plethora of learning experience and drills. It teaches you entry. It teaches you stop placement. It teaches you decision making. And it does a lot of it inside of one day. And it will bring you up faster, not that I'm trying to speed your learning curve up, but for the folks that just want to have a lot more opportunity, if you're only just using the opening range as your trade idea, and that's all you do, you're stuck to just whatever you did today. Now you have to stop. Then you got to go wait to the next day. That's a lot of time. And to me, I like things efficient. I want to get as much in as I possibly can. That's why I talk a lot, because if I was a student of me, I want somebody to go on and on and on and tell me everything, give me every detail, every nook and cranny. Tell me where I'm probably going to feel like I think I know it, but I really don't. Tell me all the trips and hazards and all the sticker bushes and the thorns where I think I got a rose, I'm going to go pluck it off the vine and not get stuck with a thorn. How am I going to see that incorrectly? I want to know those things going in. I don't want to hurt myself. I want to know everything that possibly may hurt me. Because then if I know those things, then I won't be so nervous doing all the things you tell me to do. I won't be so scared because I know I've been pre-warned in advance. Hey, look, this is what may happen to you if you're not careful. But that's largely cast aside as you've been lied to. You're wasting your time listening to that stuff. You know, I just answered a goober on X while we were listening to a previous caller. Keep trading ICT stuff so we can make serious money. You know this guy's working. So instead of trying to say you got something better, just bring something better for yourself and stop worrying about everybody else. Stop trying to upsell something, and then when you do it, it doesn't really deliver it. Focus on what works in your hands. That's what this industry needs. It needs more of this is what's working for me, and less of this stuff doesn't work. That doesn't work. And I say this because I use this mechanism to get people talking. I just mentioned VWAP. I would never touch VWAP. It's useless. Volume profile, garbage, trash. Level 2 data, not useful at all. It's what you've been told makes it useful. And because your experience of using it is next to nothing, when someone says, this was the game changer, how was it that every time I release something new, now it's the game changer? It's because the shiny new object syndrome. That's what that really is. And what happens if you just went back to this optimal trade entry? Like that somehow doesn't work anymore? You hear people bark all the time. 2022 model, that's the GOAT. That's optimal trade entry. I just gave you more details on how to find optimal trade entry. That's all it was. I fleshed out more details. The things that people don't want to hear. The rants, the things that's going to help you. If you are paying money to go through a high tier, and I'll say this part, and I'll get back to everybody else now. And I apologize, and I thank you for the liberty to be able to say these types of things as it's needed. But let's just say you paid a lot of money to go through a JP Morgan, a Goldman Sachs program. Okay, you pay lots of money for these people that tell you intraday charts are noise and run away from these guys if they tell you they can trade it or time the market like that. And you pay for that money up front to learn things. And you go through the motions of all that stuff. Wouldn't you experience some measure of expectation? Tell me how I'm going to hurt myself. What pitfalls should I avoid? When I start making money, what am I going to start feeling, and how am I going to wreck myself doing that? What can I do to stay motivated while learning and yet still not taking a live trade where I'm seeing profitability? All those things come with people with real experience. And that's why it begs the question is why is it everybody else that's a quote unquote mentor, they don't spend much time talking about how to avoid the problems, but they all have things to get into a trade. You've been lied to about this. This is the real way of going into a trade and finding winning trades. Everybody has their own interpretation of that. But everybody else is pretending they never lost money. Everybody else is pretending they don't have drawdown. Everybody else is pretending they didn't have hardships learning whatever the model they have, even if they are profitable. And that's a big neon sign. I'm full of grade A bullshit. Because if you can't hear somebody tell you, these are the war stories I had to go through and I put myself through it, and here's how you can avoid doing the same thing. And I have people that try to come through my stuff and be the exception to the rule, and they always come back and I wish I would have listened to you. I wish I would have done this. I wish I wouldn't have done that. And you told me these things. I'm telling you this stuff so that way it helps you become better at becoming who you're trying to be. And you avoid the things I did to myself. I wish that it was only a one-time conversation, but because there's new people coming in and they think they're the exception to the rule, you got to be reminded, you're not special. You're not. You're not going to be the person that becomes easy for. It's not going to happen for you. And that unsettles people in the beginning because I'm being honest up front. I've never said this is going to be easy for you. You have to wrestle yourself out of your own way. That's the biggest obstacle. You're the final boss. You are, and you start there. In video games, you have to work your way up to it. You're starting off the bat. Boom. You got somebody in the mirror that's telling you you don't deserve it, you're never going to get there, and you're probably going to fail. So why bother? And then you go on social media, and you hear other people like me and other people that's in this community, and they say, this is what I'm doing. I'm encouraging. They're encouraging. So what do? That little bit of inspiration goes to the arm wrestling table against that formidable person that's in the mirror that says, you can't do this. You're never going to be successful. Why bother? When you fail, they're all going to laugh at you. If you told your friends and your family members, they're going to laugh at you. I don't want to deal with that. So you don't really apply yourself. So when people say, yeah, I dabbled with this, I dabbled with that, I've been doing it for this many years, what have you really been doing for those 3 years? Have you been every single day, whether taking a trade or not? Are you in there watching the tape? Are you really observing what you feel and logging that? Because that's putting a big spotlight on your problems. They're your character flaws. I don't know what your character flaws are. The people you learn from that's not me don't know your character flaws. We don't know that. We are not in your head. We don't live inside your skin. We don't know what makes you comfortable or uncomfortable. We don't know what motivates you. What makes you tick as a person? Are you patient, impatient? Are you quick in decision making? Are you slow and lethargic? I'm lazy. I don't want to get out of bed right away in the morning time. Are you easily distracted? Are you influenced easily? If I can tell you the market's going to do this and you've already put a trade on or about to put a trade on, and I influence that, you are not listening to me as a student. It doesn't matter what the fuck I say. It doesn't matter what I say. Because if you have a model, you follow that. You don't follow what I'm saying. How are you going to get a baseline of you trusting and following your model? Your model's going to fail sometimes, folks. It's going to fail. And by tape reading, you're going to see it in action where it doesn't hurt you. You're going to see it doesn't fail all the time. It doesn't fail the majority of the time. But when it does, you need to see what these triggers are inside of you. What are you feeling? Do you feel like you want to go out and hurt somebody because you did it? Or it didn't do like you wanted it to? Do you feel like you need to get a drink? Do you feel like you want to roll a fatty and get blazed up? Do you win and get rocked up and you want to go lay down with your wife because of that? These are all triggers. And they tell you that you're going to react that way in extremes when it's real money. And you have to identify what these triggers are because until you do, you're going to be blindsided by them, whether you're in profit or in drawdown. And that's the truth. Anybody says otherwise is bullshit and just ignore them. That's it. Thanks.
Lex, you want to jump in here? I know you're going to have a good follow through.
I think that this is a perfect segue for last week for me because I was listening, you know, for a long time I was listening 1 micro, 1 micro, 1 micro, and it got me very far. And then I strayed away from that and I started building, and like I'm I'm not saying I didn't want to punish myself because I was trading well. So I started stepping up, you know, and not listening. And I'm ashamed to say that, you know what I'm saying? But at the same time, I was trading the best I've ever traded. And last week, the week before last, the last time we talked on here, you know, I had that big mistake and it hurt me. But I sat down and I journaled. And what is triggering me to want to push it? What is in my mind and my heart that's making me say, hey, I need to get in this crazy volatile market where it's up and down roller coaster and keep putting my will onto the market. And, you know, I had to step back. Um, I really had to step back. I had a $64,000 trade turn on me in a matter of minutes. And to see something like that and to know your potential, like I had to take a serious step back and like really journal. And really
Go into
think
detail what you feel. What did you feel when it turned against you? At $64,000, folks, that's an annual salary now. That's the average annual salary in the U.S. So, describe what that made you feel. It's like speaking bodily feelings. What did you feel, and how you thought? Like, did you question certain things yourself? Like, what is it you were feeling going through it?
my heart was jumping out of my chest first. That went like when it really started going, I was like, what is happening? You know, to see like your hard work and you're like, oh, there it is. And then to get that email that you breached your account, like you're going through the most extreme, like bipolar feelings ever, you know? But then I had to stop myself and I like reanalyzed the trade and it's like, whoa, like you are really stepping into what you've been practicing every day, what you've been showing up for every day, all the sacrifice that you have put into this craft is it's showing you. And like I wanted to break down. I'm not gonna lie, like I wanted to break down and God sat me down and he said, you need to trust in me, but you need to slow down. And for me, that was loud and clear because I needed to do some deep internal work from my childhood and like growing up and like how I view money and how I've come into money. And it really, really made me do a full psychological breakdown of money within myself, within my spirit. What's my why? Are we going to keep going? You know, I was at work and I'm working and I'm sitting here and I'm just like, yo, you seen your salary double in 10 minutes. And I'm sitting here working. And it humbled me. Like it humbled me to the core. Because this is the first time this happened, but it's the biggest time that has happened. But like instead of completely stepping away, I got myself about me, I reviewed my trade, and I was proud of myself for how I took that hit, for how I bounced back from that hit. I came back and I passed 3 accounts last week. And this week, we're back down to 1 micro. I'm going back to what got me there. Slow down. Stay with your market structure, stay with the model that's working, like understanding time and price and the work and the sacrifice is all there. You just need to trust the time. And you always say that, like submit to time, submit to the time. And I have, and like, but there's no rushing that in this, especially in this environment,
Amen.
you know? And like, trading is gonna knock you out multitude of times. Are you gonna be Rocky? Are you gonna sit down and like succumb? Like, so for me, like now I'm just backtracking into like things that my father taught me about hunting and like going back into those deep lessons that, you know, my late father had really instilled in me with making money and like with hunting and like watching psychologically things. And so I'm doubling down on that and going back down to 1 micro and adjusting there and knowing that with hard work, anything is possible. My dad showed me that.
It's hard work. It's also a skill set. Really knowing first, I mean, the skill set, knowing how it works in your hands is so important. And most folks are so impatient with themselves. Most folks are dealing with self-destruction programs, self-destructive programming, that when they come to the market, it's all about fumbling the bag. People are so nervous. And I mean, I want to bring up something, Lex, that I would like to see you do, and that's I'd like you to turn off the money. I need you to disassociate with the chart a little bit.
It's the
Okay?
process. It's the
It's the
process.
process, and you're getting emotionally charged over a dollar amount, and I can tell you that's not what you want to do. I understand that's what it is, but you want to disassociate yourself with what's happening. You want to focus on the process, and the disassociation with the dollars is where you're going to become the most comfortable and the most consistent within yourself with the skill set. You're going to fumble the bag, and everyone that's here is going to be so busy, frantically, nervously fumbling the bag because you're in a marketplace that's only going to show you big dollars and give you this inducement and this incitement of fear, greed, and anxiety, which is also the culture and the environment and the frequency that you're coming from. So just engaging in the market, you have to get over so many elements within yourself, and the dollar amount and the output is one of the best ways of really being able to make yourself different in a room full of traders,
Amen to
because
that.
you're one of right now in a room. And how you want to make yourself different is where and how you can disassociate with the outcome, because you're so honed into the income
You know,
and to the input.
oh, sorry. No, I'm
Go ahead.
listening.
No, I
No,
apologize.
no. One thing that I really followed when I was learning tattooing, because tattooing was very, like, another very, very hard thing that I learned, is progress over perfection all day. And trust the process. Like, you have to put in the time, submit to the time. So, like, I full heartedly agree with you. And, like, I've turned off the dollar amount. We're on ticks, like, completely in the process. And enjoying the journey of that process, and
Can,
knowing you'll get there when it's time, when you've arrived.
can I tell you something that's reassuring? And this is for anyone that's listening. You're gonna eventually develop your model, and you're gonna be able to eventually identify a market profile. That market profile is going to play within your model. And when that happens, your model is going to work. It's going to work regardless of your emotional attachment to the result of what that is. And what I mean by that is like, if midnight's a really big deal, and I want to see price displace over midnight a certain amount, and then all I want to do after it does that is I want to see it come back to midnight and then create some type of symmetrical swing to the other side of midnight. Maybe that's the trade I'm looking for. And being able to submit yourself to the process of, well, it's already done A, and my trade is it for to do B. And for it to do B, it needs to go from here to there. And then from B, then it needs to go from B to C. And if you're able to submit yourself to the algorithmic if then statements and the logical trees and the conditioning of what price will be doing as it's moving, and you're going to get a very good way of seeing price. It's ironic, Lex. 2 years ago, I only worked off of the 5-minute chart. Today, I work on the 5-second.
Ooh,
The amount of money
levels.
doesn't change. The clarity of the models do. So the high time frame, low time frame, it's a question of the clarity of what you're looking for. And I've made a lot of money on the 5-minute chart. I've made a lot of money on the 5-second chart. Lost as well. So what Michael said, I just want to reiterate as we are coming to a close, Lex. But Yeah, disassociating yourself with the outcome and really focusing on the inputs is something extremely important. And then we all get to come together. We all get to talk about this stuff over price. And talking about it over price, talking about it with Michael, talking about it with each other. I mean, there's a lot of healing that's happening on these calls. There's learning and then there's healing. And by not constantly running into the market, by ensuring that you're engaging in demo or simply tape reading, you are also actively engaging in a process of healing for a lot of folks.
Truly, truly. And I just want to say thank you for letting me come up. Today was a masterclass, that RTH gap. Whoo. Um, by the way, protocol, Alexis 38 from Alaska. I am a turtle soup trader, and then I by nature I have a set of rules. Just wanted to drop that in there. But thank you for letting me come up and speak my truth, and like hopefully this helps somebody, because you can be down one day, but it, like I said last time, is how you get up, and it's how you journal and get through your own mirror of yourself in these markets that's going to define who you are and as a trader. Um, Trust the process, submit to time, like Michael always says, and thank you for giving me your time.
Wonderful. We're here.
This space is very appreciated.
It's very appreciated that you're here as well, and we appreciate the contribution, Lex. Thank you.
Hey, Kid, if you want to take one more, because I got a little
Yes, sir.
long-winded earlier.
Yep.
I felt like I took a. There might be somebody that wanted to ask something.
Yeah.
Thank you so much, Lex. I appreciate you sharing your sentiments and your experience.
Absolutely. Thank you for all that you do for us.
Wonderful conversation. Market Oracle, I'm bringing you back up, buddy. I know you were in a loud, bustling area. We're going to give you another try. See if you're there, buddy.
Thank you so much, Kate. So I have a question for Mark. So for Michael, two questions. One is a technical one, and other is a personal question. Would you allow me to ask this question, Michael?
Oh, yeah. Well, jump in. You got.
That's three. So. That's three questions.
Oh, sorry.
You asked if you could ask two questions. That's three questions. But go ahead. I got you. Go ahead.
So earlier you mentioned that there are elevated risk in the market, and we have to dial down on our trading, on our activity. And so my question is, how long do we expect these conditions to continue, or do you expect this elevated volatility to remain in for years to come?
I personally don't know. I don't think anybody really does know the answer to that. So the only thing we can do is adapt and try to stay solvent. Don't try to push too hard in environments like this, because the difficulty that we're up against is something that we can't say, this is where it's going to come from, this is when it's going to happen. Like, markets are algorithmic and I can anticipate that type of stuff. But what I'm adapting to is the uncertainty of the next shoe dropping, the next thing that I didn't foresee happening. I mean, this guy in office can just look at this stuff he's posting. Like, it's incredible. Like, that stuff it's meant to get people fearful. It's meant to get people excited about something. And I don't think that should be done personally. And you can agree or disagree with me on that regard. But that level of concern is magnified in the markets. It's so much more impactful versus the average person going to work every day. Oh, well, that's my guy. I voted for him. He's doing what I told him to do. Or this guy's a jerk, and then you put him in prison. That's the extent of it. And you go online, you make your opinions. But here in these markets, those inflammatory statements, they supercharge fear and greed. And when that's there, you're going to have corruption, you're going to have manipulation, you're going to have insider trading, you're going to have all those types of things. And when it's a constant diet of not knowing when it's coming, but we can know it's coming, I don't think it's going to end until he's either out of the office or things calm down greatly in the Middle East. And I don't know the answer or timeline for that. But what's your second question?
Yes, sir. So my second question is, when you initially acquired wealth, you experienced situations where friends attempted to exploit your financial standing and take benefit of you. So, what transformations happened over time in how you choose and build friendships today? I know this is a personal question, but
Well, in the beginning, I used money as a status symbol. Having money, making money was a testimony that I was a significant person and I wasn't insignificant because I felt insignificant the way I was raised, not having parents that really raised me and grandparents that did. So I was learning how to be a son. I was learning how to be accountable to myself and specifically to my grandfather. He didn't get a chance to see me doing all these things. So I replaced that pain of not being able to be satisfied by him saying, I'm proud of you, with getting the constant feedback of friends and people around me saying, wow, like I'm impressed by that. Or I can't believe you got all that. Like you did that. You made that much money. This cost that much money. And what that does is it fed me with a desire to feel important because of that transactional relationship. And that transactional relationship is no different than a gold digger getting with you, whether it be a male or a female. If you have something in excess and it can be exploited, when you are trying to force a outcome that satisfies you, that satisfies your flesh, that gives you a sense of importance and it elevates your pride and ego, um, you won't see it when they're coming for you. You'll interpret it as they like me, they love me, they want to be my friend, they want to be around me because they like who I am. And you know what you're doing is enabling them to stay with you because you're paying for meals, you're paying for engagements out in the movies or shopping, going on shop. I was a fool for that. I would go out and say, look, I'm going to go shopping. I'll get some watches and get some new threads and some new kicks. I'm going to go out and get this stuff. You want to come with me? Initially, I started with wanting them to just watch me spend money. Then it became, well, that wore out. And then I said, let me get you something. And it went from just getting them one or two things to I'm going to get what I want and you can have the same thing I'm getting too. And then, of course, now everybody wants to be friends with me. And I created this situation myself. They didn't say, I'm going to take advantage of you and I got blindsided. I fed into this, just like a toxic relationship is. The relationships don't start off like that, but they become abusive because you enabled that relationship to become abusive. So what I learned over time was you can't pay for friendship and you can't buy love. And if it's love, they won't leave. And if it's not love, they'll leave and they won't come back. And those were painful lessons for me. And when you have money as a basis of determining your self worth, it wrecks everything. And you can't love. Like it was impossible for me to love somebody else. If my wife would have came back to me, I would not have been able to love her because then I would have been like, I'm going to punish you now. Now you want me because I have money. So now I know do you want me? I will punish you. And that's honesty you probably wouldn't get from anybody else, but that's exactly what I wanted to do. I wanted her to come back so I could punish her for hurting me, for leaving me before I told her I was going to become something. She didn't have any faith in that. Now, I didn't want to be a trader then. I was going to be a systems analyst. I was going through school. I wanted to be a computer specialist, okay, and I want to have my own company. But she didn't have any faith in that. She didn't have any visibility to see in the future that was something's going to happen. So it doesn't matter at all what I was willing or what not to do because she's been through many relationships with lots of different men throughout the years. And she's had several relationships, had children, and it's just she's been a wreck with everybody else. So I dodged a bullet. But at the time, I would have held on to that grenade and died on it because it hurt me and I wanted to win back that person just to punish them. That's really what it was all going to be. I wanted to take the money that I had and make them feel punished for having left me. It would not have been a good relationship. So you might hear me in these videos talk about how I wanted to win her back, but the reality is I wanted to win her back to punish her, make her fall in attachment to the money, but then punish her while she was with me because the pain that she caused. And I could not love anybody. And the truth was, I was in multiple relationships and I became a womanizer because I wasn't satisfied with anybody. And it gave me this self worth that was so elevated, ungodly, disgusting, that anybody that would have got with me would have been with someone they should have never been with. Outwardly, it would have been like, wow, you got a guy that's really put together. He wears his clothes nice. He's in good shape. He's handsome. He takes care of himself. He's got nice things. And what else? He's a terrible person. He's toxic and he's all about himself. So yeah, I would have drawn in the wrong type of person, and I would have either been an enabler for someone to take advantage of me, or I would have abused somebody because of my sense of self worth being inflated when it shouldn't have been that way at all. And it started by pain, and pain going through multiple relationships. And one relationship I had was very wholesome, and I was engaged to her, but I ran from it because I was afraid I was going to hurt her when I never intended to hurt her, and I cut it off. But she instilled in me a lot of things that I hold till today, and my ability to rein myself in and not make it about me. She was the one that changed that, and it's not my wife now. It was another young lady I met through, and you probably remember. We followed each other home from work, and then I found out where she lived at, and then we started dating. We were together for a little while, got engaged, but I got scared. I was afraid that she wasn't going to stay with me. She was just lying to me while I was in the process of starting to become a trader, and she was seeing the effects of those things, and I doubted whether or not she was sincerely with me, and I ran from it. Was it the right decision? I wrestle with it every day, and I can say that honestly in the presence of my wife. It's just it clouds your mind when you have money and when you make your life about money. And I loved money, and that's the root of evil. It's not money. Having money is not evil, but the love of money is the root of all evil. And I was in love with money. It was my power. It was my source. It was my God back then. I was ungodly. I was absolutely despicable. But when you broadcast that out in an area where it's not affluent, because I didn't grow up in an affluent neighborhood, I didn't grow up with affluence, I didn't have a silver spoon, all those things start piling in and start shaping you into a person you never thought you would become. But one day you wake up and you're the most disgusting person you've ever met. And you see this in other people. And I didn't have someone tell me, you are a piece of crap, you're arrogant, you're this, you're that, because they didn't want to offend me and then cut off that meal ticket. But this young lady was telling me things that I wasn't aware of, the good things in me, which was very few, but it grew in a list the more time I spent with her. And she softened me. Like she allowed me to see things that are more appropriate for life, not about money. She didn't care what I made. She never asked how much I made. Nothing. She said, do you like what you're doing? Yes. Where do you see yourself going? Do you think you're going to make a career out of this? Yes. And she never talked about the money. She never cared about what it was. How are you going to spend it? She never told me I shouldn't be buying this and shouldn't be buying that. She never expected anything. This woman had a dozen roses delivered to her work on a Friday, and then the following Friday it would be delivered to her home at her parents' house. Every week she had $100 spent on her on roses delivered to her every single week. And I was romanticizing this woman because she was letting me get in contact with something in me that I didn't have up to that point. And that relationship helped me break away from the love of money. And then I became more compassionate to other people, but I still wasn't afraid. I still was afraid rather of being hurt again. And I looked at her as better than my first wife. And I could not have taken another heartbreak from somebody like her. So I ran from it. I broke it off, and she even gave me the ring back. It was like the perfect woman. It was, if you're going to break up and if you're not going to be together, typically the women say, well, you gave this to me and it is. And I would never ask for the ring back. But she gave it back. Like, that's a rare thing. And she's moved on and has a family and 2 kids and a husband. She's Christian. She does everything she does as a woman. I don't talk to her. I haven't talked to her. But the things I see on the internet, I see a lot of the things I did wrong as a young man. And it's all about attention seeking, spending money to get more attention. And I promise you, everybody that's doing that, they're so unhappy inside. They can put the biggest, broadest smile on, talk the loudest, talk about how happy they are and how life is so amazing. If you have to say life is amazing and life's awesome right now, you're lying to yourself. because I don't sit here and stop and say, life is so amazing, so awesome, because I know it. I live it. I'm content. I live content. But the people are online that are constantly promoting themselves and throwing materialism and saying, this is what I just bought, this is what I spent. You're actually, if you haven't arrived there yet, you're actually watching them get to that same place I was at. And they don't even see it coming. That's the problem with it. You don't see it coming until you're in it too thick and it's doing so much damage and it wrecks you emotionally. And then you start building all these concerns that wouldn't otherwise be there. How horrible is it to meet someone and feel an attraction there that's beyond superficial, just on a flesh basis, and you feel an attraction, but then now you're scared because you feel like they want your money because you live with your wallet on your sleeve or your purse on your sleeve, and everything's about how much you make and how much you earn and what you've accomplished, versus meeting someone that might be your soulmate and being honest from the beginning and saying, hey, I like spending time with you. And would you like to go to dinner? Would you like to have something to eat? And in the beginning, talk about it being Dutch. Let's split it. Let's split the tab on lunch and see how that person you're trying to spend time with, how do they react to that? If they look at you curse, like, what? Pay Dutch. If you can't pay for me, I ain't going with you. Red flag. Red flag right there. That doesn't mean all of the people that would do that, but if they are already positioning themselves where you're the meal ticket, you pay for everything, that sets the precedence. And then it's all going to be about what they can take from you and what you give to them. And then you start the relationship off on the wrong foot. So eventually, once you know who you're with, I'll just say it this way. Christ said, don't let your left hand know what the right hand's doing. In the beginning of relationships, you're not obligated to tell your person you're suiting, your date, your relationship. You're not obligated to tell them what you earn. You don't have any obligation to tell them what you have in the bank. You have no obligation at all, none. But men, I can tell you this: we have to do these things because we feel like if we don't, women won't be interested, friends won't be impressed, and that's the trap. You end up doing things, living financially open. You have your financial books in front of everybody, and they get to have the luxury of giving you their opinion and also determine whether or not they're going to take advantage of you or not. But you don't know what their intentions are. So don't even bring that to the equation. How much better is it when you guard all those things? You develop the relationship like I've done with my wife. My present wife, she had no idea what I had for a long time. Long time. And honestly, I felt guilty a lot of times because I'm like, I made her work a job for years, not knowing, because I was so scared. And that you might look at that and hear me say that and say, wow, you're a real piece of shit. But you didn't go through the pain that I went through. And I'm human. I'm not algorithmic, okay? I'm not AI. I have real hurt feelings that I had to go through. And I didn't want to hurt myself. I didn't want to open myself. I had a whole lot more that I had with my first wife than when I met this one. So I was guarded. But when I knew I had someone that I loved and I could trust, can you imagine her eyes? When I said, listen, I want to talk to you about what we're able to do, and I want you to stop working. What? She thought that I won the lottery. She didn't realize that she won the lottery when she got with me. And I held that for a long time. And I expected her to have some animosity towards me. I expected her to punish me for that. And I accepted that. And I told myself, it's normal for her to feel that way. But I'm going to show her what I was doing was a purpose behind it, because it was not selfishness, because she never did without. But I had to dial back my lavishness of pouring things on her in the beginning, because how would I justify that? Where am I getting that money from? Where's that coming from? So by living modestly, I forced myself to open myself up to a real organic relationship. I didn't flash it. I stopped doing all those things. And by having that be the basis of our relationship, her knowing the real me, instead of trying to punish my first wife with the money I was making, I rewarded my present wife with her being honest, being open to me, being nurturing as a woman, as a wife, as a wonderful mother to my children. She accepted my son, Cody, who was not her son. She endured all kinds of problems with that woman that I had Cody with. She endured all that stuff. And anybody else would have been like, man, I ain't got time for this. But she endured all that. So when I sat down with her, I told her, I said, look, this is what I want to do this. And you tell me what you think. And she saw the numbers and she saw the bank accounts and she saw what I was able to do. And I sat down and I made her whole family's annual salary in one day. It was like a jaw dropping moment for her. She's like, is this real? Is this real? Yeah, it's real. It's real. And I want you to know that I am absolutely madly in love with you. I trust you. And if I didn't trust you, I wouldn't be doing this. But I'm hoping that you don't change who you are when I do this. And the only thing she's done is she found a new love for shopping, but she does, I exaggerate it for fun to tease the guys. But like anybody else, she likes to shop. And she has credit cards that I make available to her that she can use. But I don't feel victimized by it. She doesn't abuse it. She doesn't do anything out of the ordinary. She doesn't punish me. And she makes me feel like I've done the right things with the things I've done in our relationship and what I've done with our finances. And I don't know how I can help any of you, but that's what I did. And it might not be the best way of doing it. I may have done it incorrectly. Maybe someone else did it better. But this is what I had to work with. This is what I did, and this is where my life is today. And I'm absolutely 100% thankful that the Lord's placed this woman in my life. And I'm thankful that I have the relationship with her. And He could take all the money away from me, and I'm still going to be content and rich because I have a wonderful life.
Thank you so much, Michael. I think this is the first time we have heard about your wife. Am I right, Kit? And I do not intend to be out of line. I apologize if I am.
No. It's really, this is just a great conversation. We get to, I mean, it's really nice to. It's a great question, Market Oracle. I mean, you ask a really good question, and yeah, I think it was a really wonderful response, Michael. So,
Michael, truthfully, that hit really close to home because as a young man right now, I feel like I've been really caught up on the material. So for me personally, like that really hit.
Having lots of money in the bank, that doesn't fulfill you as a man. Okay, having sex with a hot woman doesn't fulfill you. Knowing that I can talk to this woman and tell her what I'm fearful of, and she won't look at me weird or judge me or say I'm less of a man because I have fear, or if I cry, if I break down in front of her, she sees it as humanity. She sees it as I'm a real person with real emotions, and I can pour myself into this woman and not feel like I made a mistake in doing so. And honestly, men, if you're listening, you know that's what you want. You would take that more than being able to retire at your job today. Because you can always get to the skill set to be able to retire. But how hard is it to find someone that's your soulmate, that you can absolutely love and trust, that you know that will not ever hurt you, that's going to be behind you all the time, supporting every decision you ever make, and there is no reason for you to ever leave that bed, leave that marriage, leave that household to find something else. There's no something else better than this. There's no something else. And that's a level of contentment that all of you should strive, both men and women. If you put more emphasis on you finding the right person so that way you can secure a lifetime with, it's far easier to become wealthy in that because you don't have all that toxic tug of wars of should I do it, should I not do it, should I make them available to what I'm doing, should I bring them into this, should I hide it. All those things go away and they become an encouragement. They become a reward for you to be able to say, look what I'm sharing with you, look how God's blessed us, not me, blessed us. And she feels like she's part of it. And that to me is a wonderful blessing. And I'm thankful that I've been given that opportunity.
Yeah, the other day I had a girl tell me, she's a few years older than me. She told me that, right now I just can't give you what you want. And I kind of just was a little kind of caught off guard by that because, I've been kind of trading decently well, everything's good. I'm making some money, and it's kind of like, what the fuck? like what do I have to do?
I
So
will say in this game in trading, I don't know what the proper term is. I've heard a term like Jezebel, but it's when the man thinks with his dick and doesn't have emotional intelligence and ends up making very poor decisions that can become oftentimes destructive. I'm that guy, right? I'm that guy. I've made the poor decision. I've thought incorrectly, or I've been motivated incorrectly over the years. And I couldn't agree more with what Michael's saying. And I think it's a really important thing for traders to really conceptualize. And that is, I mean, you're a professional decision maker, and who you decide to spend and invest time and energy with is extremely, extremely important. And we can have lustful, intentions. We can have maybe some flippant intentions, like, I'm just gonna go do it because I ain't got nothing better to do, right? And you'll show up and you can say what you want and whatever, acquiesce to get in, into that female's favor, and it can be good, bad, or more than likely toxic. What Michael's saying, I mean, coming from a nest of love and nurturing, and having just like trading and having a model can really be a superpower. Having the right relationship can really be a superpower as well. And equally, if it's not the right relationship, it can be a real detriment or a real downfall. And I'm here to say, we are traders. We live in this boom and bust kind of thing. You can have it all, and one day and the next day it can all be gone. And men, that does include your family. So be mindful and careful of that. Showing up, going a long day at work, coming home, the hustle and bustle of the kids, the wife making some kind of meal, happy to see you home. That might seem vanilla or benign, but I promise you, men, if you've had that and then it goes away, that lack of is something you will feel. And I'm a guy that will tell you, it's not anything you want to aspire towards, right? There is a level of, I use a term lately, atonement, and it has to do with it's almost a spiritual, religious kind of term, in where you're dealing with some form of repentance of things that maybe you've done wrong. But for me, I believe the self-destructive programming that we all have within can lead us to find atonement, to find a reason to want to repent, if for no other reasons than to the injustice that we've done to ourselves. And the conversation with Michael today, getting someone in your corner, someone that kind of loves you for you, it's not easy. It's not easy to find, right? That idea of a ride or die, it's not easy to find. And that connection with someone that you might find is also something typically worth trying to nurture and kind of care for. It's a dicey topic, but you're gonna know where you're at within a relationship, whether it's the right relationship, whether you're in the toxic relationship. We all can hopefully aspire and hope that we can find the love of our lives, or if we have been damaged within that journey of love, that we can heal, repair, and stay open and receptive towards finding it again. And I think on that note, 12:10, I like the time.
Yeah, have fun, folks. Hope you learned something. Hope you had an engagement that was worthwhile and valuable. And talk back to you next time. Be safe.
Thank you, Michael. Is there any way we can close out with a prayer? Is that possible?
Go ahead, buddy.
All right, dear Lord, thank you for blessing us. Cover us in your blood, Lord. Thank you so much for this beautiful day. Protect us, Father, and just thank you for everything you do for us. In your heavenly name, I pray. Amen.
Amen.
Amen. Have a great
Amen.
Amen.
have a great rest of your day, everybody. Talk with you on the next Trader Roundup.